So the market is selling off. Major sell off yesterday after the Fed made their announcement that they are going to cut interest rate by 25 basis point, 0.25, which was widely expected from Wall Street. But what they also announced was that in 2025, they would only be 2 rate cuts as opposed to the 4 rate cuts they had previously mentioned in September when they had started this rate cutting session. And because of that, that led to the market sell off. So everything went down. Dow, Nasdaq, S&P, everything went down. And I was thinking about it, and this is why financial education is very important. Back in 2008, during the great financial crisis, when the market kept going down and down, and I kept seeing my Fidelity account down and down and down every time I got my statement. And I wasn't really into investing back then, and all I saw was my amount going down and down and down. And I said, listen, if the next statement is like this, I'm selling. And of course, that's what I did, which was the absolute worst thing I could have done. Liquidated everything, paid the taxes, sold at a loss. Absolute great mistake, right? Because I didn't really know that markets go up and market come down, and when it comes down, you keep buying, you have an opportunity to buy shares for a cheaper price, and then when the market eventually go back up, which it did in 2010, it started going back up, and we had like a decade of a bull market. But I missed that because I had sold and I locked in my losses. That's what they call it. Everything else, like now, the market is down, is all paper losses because you have not sold, right? All paper losses. And these are things that I wasn't really knowledgeable about. So what does that mean by paper losses? That means if you have $100,000 invested and the market goes down by 10%, now your 100,000 portfolio is now only worth 90,000. But that 10,000, you're going to see in red, right? It's in red, it goes down, is a paper loss. You didn't really lose it unless you sell. You didn't really lose it unless you sell. If you sold your now $90,000 portfolio, now they have what they term, you have realized your loss, or you have locked in your losses. Because now you've sold it, and now that you've sold it, you're going to have $90,000. And there's a $10,000 difference. You have locked it in. If that portfolio or if your portfolio now goes up back in value, you will not have an opportunity to benefit from that because you no longer own the security. That's why it's only paper loss. If you wait and it goes back up in value the next week or the next month or whatever, you really didn't lose because you still own. And it goes the same way too. When the portfolio goes up in value, you have a portfolio that's worth 100,000 and it goes up 10%. Now it's worth 110,000. But those are unrealized gains or paper gains because you don't have the money. You only get the money when you sell. Okay? Sometimes you hear people talk about taking profits. When they say taking profits, they mean selling a portion of your equities or your stocks that have went up in value. Until you sell, they're only unrealized losses or unrealized gain. So again, because of the announcement that they're going to make only 2 rate cuts in 2025 as opposed to the 4, because they believe that they have stabilized the economy with the interest rate cuts. Wall Street loves low interest rates. So obviously, when the interest rates are not going to be cut as low as they would like, that explains the market sell-off. But otherwise, Secretary Powell, Jerome Powell, said the economy is doing great. GDP, the economy is growing. Everything else was stellar news. So this is an opportunity to continue to buy great companies, great ETFs at a lower price. Because when the market goes up, you're going to get that additional gain. You're buying in at a discount. This is what I did not know in 2008. So this is where the combination of financial education, long-term horizon, and having available funds to invest all merge together. Okay? So market is selling off. You know the reason why. There's no fundamental problem with the economy. You're going to be able to buy stocks at a discount price and benefit going into 2025. So I would continue to buy. I'll continue to invest. Absolutely. All right. And your older self in 2025 will thank you. MD Investor with another video to increase our financial IQ so we can break the cycle of generational poverty. MD Investor out.